Hello traders, welcome back to this week's Forex Forecast with one man. If this is your first time coming across my channel, please subscribe and turn on post notification. In this week, we are looking at gold. And if you are new to the channel, here we look at two simple concepts. That is quote report coupled with technical to find our trade setups. So on this week, before we dive into gold, let's look at quote report. So quote report, it's simply how institutions are shifting their orders in the market. And on this week, all we can see at gold is that gold still has institutions still have over 300,000 long position in the market, whilst they have only 68,000 short positions in the market, which means that overall institutions are still very bullish on gold. But in this week, or in the previous week, what we could see here is that institutions have added 3,000, a little bit above 2,946 short to the market, whilst they close 18,000 longs of their position. So what this data simply means is that institutions are still overall positive, but for the short term, they are taking profit off their long positions by adding few shorts. So this data only tells me that gold temporarily may be having some very short movement, but those are just profit taking moves in the market. So when we use this data, it only tells me that overall I should be looking for buying opportunities, but in an event where we see a clear selling setups, then we are likely to try to take a sell. But overall direction, or a more safer direction to look for a trade, is for buying opportunities. So if that is the case, then let's quickly move to the technical and see what we can do. Now gold, as we already see, overall is very bullish. Institutions are still extremely bullish on gold. Now, so what can happen here is that on the technical side, since institutions are beginning to take profit of this entire move, so you could see that they are beginning to take profit of all their long positions by closing only the long positions and adding few sells, as we saw on the commitment of traders. So which means that this week, if market opens on the weekly, gold can easily fill this last week's candle. So gold still has the ability to fill this week by hitting 4250. So if market opens and you can afford a stop loss below this bullish candle, that means that you can open a buy at 4064 and put your stop loss just below this candle, whilst your TP is above or slightly at 4250. So if you can afford almost 700 pip stop loss, then open a buy with a stop loss below 3990 on the weekly time frame. Now let's quickly move to the daily time frame and see what we can get on a daily time frame. Now on a daily time frame, we are still very bullish because price after this drop, right? Price started creating series of what higher high, higher low, and now we are at what a higher low which can push price to create a new higher high. So on a daily, gold still shows buying opportunities than selling opportunities. So on a daily, when market opens, you can still open your buy position, and if you that is only if you can afford stop loss below 3999, and first TP is around 4150 and second TP 4250 and third TP at 4350, almost 3000 pips. But if you cannot afford almost 700 pips stop loss, then we take it to the daily, sorry, the 4 hour time frame. And on the 4 hour time frame, all we could see here is that the whole of last week gold has just been ranging between 4100 and 400, which is 1,000 pip range that we are seeing on gold. Why? Because now institutions are no more adding long positions to the market, as we've seen on the commitment of traders. Institutions are not adding long positions, they are rather taking profit off their long positions and adding only few sales. So institutions are not adding long positions, and then they are also not adding aggressive sales to the market. That is why we are seeing almost 1,000 pip range. So now on technical side, gold is still trending or moving beautifully against what, or on this trend line, creating series of higher high, higher low, higher high, higher low, higher high, higher low, and then now we are bound in this range. So when market opens and you can afford a stop loss below the last low, then like we said, you can open a buy, stop loss at what, 399.90 and TP all the way up there. But if you cannot afford such a stop loss, then all you need to do is to monitor this range. All you need to do is to monitor this range, and when you see gold drops a little bit to 4030, 4000, which is 4,000, which is a round number, and then we see any buying evidence around here, then this becomes a very key area to open our buy position with our stop loss just around 3980, and then TP back to 4100. So it means that this week we are looking at what, only buying opportunities, and the only time we will look for selling opportunity is when price on a daily time frame. Since on a daily we are also in a range of 4000 to 4150, that means that on a daily time frame, if price moves to 4150 and then we see a 4 hour selling confirmation, then we might take a sell from 4125 selling zone, 4125 selling zone, 4125 to 4145. We might look for selling opportunities back to 4025 with our stop loss just around 4155. So if market opens and then price moves to this zone, and then we see a lower time frame 4 hour, which is around this zone. So if we are able to see any 4 hour confirmation around this zone, then we are likely to sell gold from this zone back into the range, because this entire zone is a range. And since institutions are not adding long positions, we are likely to see the monthly candle closing within this range. So for us to sell is when we see a selling opportunity around 4125 with a maximum 200 pip stop loss at 45 around this zone. Then we sell gold back into this range. And also, if we see market opens and we see price drops a little bit, 41 40 35 25 40, and we see any buying opportunities from here, then this is also a very good area to look for buying opportunities with stop loss on 80 and then TP back into the range. So this week we are looking at both sides, because at the institution side they are not adding longs, but they are also not adding too much shorts, which literally means that what institutions are at the sideline, and this is just a retail activity of a range. So we when price is able to drop down a little bit to 4025 400, then we look for a buying opportunity, or when we see a buying opportunity from here, then we open buy to the upside. And if price moves aggressively to 4135 4145 zone, then we also look for selling opportunities from this zone if we see one. If price breaks this zone, then we can look for an intraday buying opportunities above 41 but all the way to 4200 and eventually to 4250, which on a daily is very clean. That means that if we are able to see within the week and we are able to see a daily candle breaks 4150, then this becomes almost what an 1,000 pips range for us to look for an intraday buying opportunities above this zone all the way to 4250 with stop loss just below the zone. And if price breaks this level again within the same week, then we add another buying opportunity to the upside, step by step add another buy opportunities to the upside with stop loss below the zone. So this week's price action is very simple and very easy. So we are just looking for buying opportunities. The only time we might want to, or the only time we will turn completely bearish on this market is if and only if we see price breaks below 3900, because once price breaks below 3900, what it means that institutions are beginning to increase their short, and from here we might start to look for more sells down to 3800 or all the way down to 3700. But for this month there is little to there is low possibility that we are going to see such moves on gold. The bulls are, or the buyers are trying very hard to hold gold on $4,000. So several times we can see price push a little bit close to 4,000, and then we are going to see aggressive buying coming in several times. So this week we are only looking for buying opportunities, and step by steps we can add more buys after price breaks this level, we can add a buy, and when you break, we can add a buy all the way back to all-time high. If you're a swing trader and you don't have time for intraday entries, or you don't have time to be monitoring the trade, then all you can do is once you see any bullish evidence or market opens, you can just open your buy stop loss almost below 3990 and then TP all the way back to all-time high. So if you can afford an intraday, or if you can afford almost 700 pip stop loss on a daily time frame, then you can open a buy and then leave the trade to run all the way back to an all-time high. But like we already said, if you cannot afford such a stop loss, then you need to monitor the trade on a lower time frame, and several times we can see price making an attempt to head towards 4,000, and this is where buyers are going to step in. And if you are looking for an intraday sales, the only zone to look for an intraday scalping sell is around 4125-35 zone, where possibly sellers can come in to push market back into this range. So this is basically the range where from here sellers can push the price back into the range. So that is all for gold. I am bullish on gold. So thank you for watching. If this video is impactful or also align with your personal setups, then you can easily share, like, and subscribe. Another way you can also enter is by the break of this 4-hour trend line. So we could see clearly here that price on the 4-hour is holding strongly on this trend line. So we have first touch around here, we had a second touch, we had our third touch, and we are also reacting. So all we need to do, if you want to be more careful or you want to monitor this market, is just by waiting for price to drop, possibly break above, and then you start to find a lower time frame entry above the break above, and you already know that whenever there is a break of trend line, the target is high of this trend line. So which means that even if you end up missing this breakout and you did not find any selling opportunity over here, then all you can do is to, over here, when price breaks this high, gives you a correction, hold above this zone, then from here we look for more buying opportunities from here to the upside based on an intraday level. So that is all we have on gold. We are looking for buying opportunities this week, and for us to sell, we can only look for an intraday sell above, we can only look for an intraday sell below 4130, 4150 zone if we get an opportunity from here. Another way, if you are an intraday scalper or intraday trader, is maybe if price breaks 4,000 and stay below 4,000, then if you see a lower time frame, maybe a 15-minute, 30-minute bearish correction, then you might want to try a sell back to 388 level. But And overall, I am not going to look for any selling opportunities below this zone. All I'll look for is maybe price breaks, faked out, close above 4,000, and then I'll open buy opportunities all the way to the upside. So thank you for watching this video. If this video is impactful, then all you need to do is share, like, and subscribe. Thank you. See you on another weekly analysis. And also watch my live video if I come live, so that I trade live almost every single day. If I come live, then we trade together. Bye.